Hi everyone. It is probably the busiest week ever for markets. The US presidential election will eclipse everything else, but there are several other crucial events like a Fed meeting and US non-farm payrolls to follow the main dish. Overall, the tone in the markets will depend mostly on the US election outcome and whether we have a clear result on election night. While U.S. Election Day is tomorrow, November 3, 2020, over 90 million Americans, or 65% of the total vote count in 2016, have already cast the ballots. Many more will be doing so until the polls officially close and the actual voting figures begin dripping in. Markets will likely remain nervous early in the week, but volatility is set to explode when real results are announced. There is no edge in trying to figure out an US election result for a trader and an investor. The elections could bring about many changes that are likely to impact on the equity markets and even currencies. However, market participants should be prepared for the possibility of a short or longer-term shift in the current market sentiment after the results should markets suddenly show any unforeseen uncertainties about the candidates' positions. With most of the equity markets close or being in oversold territory, two scenarios can unfold. Firstly, the markets can remain at current levels and even gradually decline further. The alternative is to correct from these extremely low levels and retest the previous high. We can only hope that for South Africa and everyone else's interest, the best man wins the White House. Opinion polls still have Biden comfortably ahead, but Trump has narrowed the gap and investors are reducing their risk exposure ahead of the event in fear of another upset. According to betting markets, the most likely outcome is still a landslide Democratic victory, with the probability that the Democrats take full control of government resting at 56%. This scenario is expected to deliver massive stimulus packages to heal the economy, so it could boost the wounded stock market but sink the US dollar on concerns of gargantuan deficits. However, there is an equally good chance that we end up with a divided government, where no single party controls all of Congress and the White House. A lot will depend on the race for the Senate, which is too close to call. The market reaction would vary depending on who takes what. For instance, if Biden becomes president but the Republicans keep the Senate, they will likely veto most of his stimulus proposals and the result could be another wave of risk aversion. But the most bearish outcome for the markets may be a contested election. If the numbers are close and Trump loses, he might dispute the result in the Supreme Court, leading to weeks of uncertainty. The initial reaction to that may be a sharp sell-off, but it might not last long. Once the smoke clears, many market participants could see this as a buying opportunity. Overall, Biden has a much bigger lead than Clinton did against Trump at this point, both nationwide and in most battleground states. Election polls were spectacularly wrong in 2016, but pollsters have since changed much of their methodology to adjust for that error, so the polls may prove more accurate this time. That said, if there was ever an election year that the polls would get wrong, it is probably this one, and Trump has been doing a lot of rallies lately. A win for Biden in Florida and Pennsylvania would signal a clear path to the presidency and also higher chances of Democrats flipping the Senate and passing a generous stimulus package, good for gold equities up to a point and adverse for the dollar. At around 3:30 local time on Wednesday morning, officials are set to begin releasing results. Also keep in mind that there is a good chance we won't know who won the presidential election on election night. More people than ever are voting by mail this year due to the pandemic, and mail ballots take longer to count than ballots cast at polling places. But because each state has its own rules for how votes are counted and reported, some will report results sooner than others. Those disparate rules may also make initial returns misleading. The margins in some states may shift toward Democrats as mail ballots which are overwhelmingly cast by Democrats are counted, while states that release mail ballots first may experience a shift toward Republicans as Election Day votes are tallied. In conclusion, it is probably best to be extreme cautiously this week out, or at the very least trade smaller and with wider stops. There might be great chances, but there will always be more chances and other moves. In such circumstances, the ultimate goal is to protect your capital.